In the tax and benefits section, we want to enter any employer benefits that you might be receiving, defined benefit pensions, Group-RRSPs, defined contribution pension plans, any employee share purchase plans, etc. So on the left side, we're going to see all of those employer-related benefits. On the right side, we're going to have any government benefits. So it's going to be old age security. So we want to enter the estimate based on your years of Canada. The platform will estimate this benefit for you. And we want to enter in your CPP benefit estimate. Now you can grab this from the Service Canada site. If you're getting close to age 60-65, it's a fairly reasonable estimate. So here we've just put in the average CPP benefit for now for John and Lisa, but they could always grab it from their Service Canada site as well. You can come back in the future. You can do a detailed estimate for the Canada Pension Plan if you enter in your pensionable earnings year by year. Now this can be important if you're still a few years away from retirement or if you've retired early. It can be important to enter all of those pensionable earnings, which then lets the platform do a much more detailed CPP estimate. But for now, we're just going to go with simple planning. We're just going to enter in their years in Canada for old age security. So we've got 47 years because John and Lisa have lived in Canada their entire life. We've got their estimate from Service Canada for their CPP benefit. This is the monthly benefit at age 65. And then for employer plans, we've got Lisa, who's got a small defined benefit pension. We've got the start age for Lisa. We've got the annual benefit. It's important to enter the annual benefit here. We've got the annual benefit post 65 and pre 65. Often there's a reduction when a bridge benefit goes away at age 65. So make sure you've got that captured. We've got the inflation indexing. In this case, Lisa's pension is fully indexed to inflation, so it's 100%. But if your pension is not indexed or only partially indexed, you might enter 0 or 50%. And then we have the survivor benefit percentage. This is what John would receive. So John would receive 60% of Lisa's pension if she were to pass away unexpectedly in the retirement plan. The annual pension adjustment. Now that's important because it does affect the RSP contribution room for Lisa going forward. So get this from your notice of assessment. Take a look at your pension adjustment. If you have a defined benefit pension plan and you're still contributing, that number is going to be very important. If you're already started your pension, that number is less important. So you can just enter a 0 there. Now for John, we've got a Group-RRSP. So here we need a 3% employee contribution. The platform will calculate this automatically based on John's salary. And we've entered a 3% employer match. So you can enter that based on the salary and the platform will calculate that automatically for us. That's all we have to do. If you're missing a type of account, maybe it's a deferred profit sharing plan, defined contribution pension plan, employee share purchase plan. Again, go to your profile, make sure that those accounts are activated, and then you'll see entry fields here in the employer column. You'll see entry fields for those benefit types.